Good afternoon, and welcome to another episode of Talking Business with the Institute of Chartered Accountants of Barbados, or ICAB. I am Jason King, Chairman of the ICAB Taxation Committee. Last week, we shared that the Income Tax Amendment Act 2024 and the new Corporation Top-Up Tax Act 2024 were read a second and third time in the House of Assembly by the Minister in the Ministry of Finance, Economic Affairs and Investment, the Honourable Ryan Strawn. This week, the two bills will be debated in the House of Senate. The Income Tax Amendment Act 2024 updates Chapter 73 of the Laws of Barbados in principally the following ways. 1. From income year 2024, the corporation tax rate will be 9%. Unless a company has registered as an approved small business under the Small Business Development Act, Cap 318C. If a company is able to successfully register and its gross income is $2 million or less, the corporation tax rate will be 5.5%. This reduced rate is only allowed if you are registered under the Small Business Development Act. Otherwise, the rate of corporation tax defaults to 9%, even if the company earns less than $2 million. Note also that if a company registered under the Act has gross income that increases beyond $2 million, the tax rate to be levied will revert back to 9%. 2. Companies that earn income from international shipping will pay corporation tax on a sliding scale from 5.5% based on their taxable income. 3. Companies that earn income from insurance business will continue to pay corporation tax at the rates of 0 and 2% depending on their class of business. 4. Companies that are part of a multinational enterprise that are in scope for the top-up tax legislation will pay an effective tax rate of 15%. If the companies are not in scope for the top-up tax legislation, those companies will be charged on a sliding scale similar to the shipping companies. The concept of a multinational enterprise, or MNE, as it is referred to in the legislation, is a company that produces goods and or delivers services in more than one country. Some of the largest and well-known MNEs include Apple, Google, ExxonMobil, Nestle, HP, the Coca-Cola Company, Nike, and the list goes on. The MNE is the focus of the new Corporation Top-Up Tax Act 2024. We will focus on that act in next week's episode. 5. Tax losses can now be carried forward only 5 years and are limited to reducing taxable income to 50% of what it would have been prior to the application of the tax losses. 6. The legislation also reintroduced the use of taxable losses in a group of companies. This was previously removed in 2015. Group relief is a concept that allows companies that are owned at least 75% by the same parent company to transfer the use of its taxable losses to a fellow subsidiary or the parent company. Group relief is not available to companies who will receive the benefit of the reduced tax rate of 5.5% under the Small Business Development Act, international shipping companies, and insurance companies who also enjoy a lower tax rate than 9%, as well as companies that have been granted tax concessions. Since group relief is being introduced again for application from either income year 2024 or 2025, depending on the level of prior year losses, there are some stipulations on the amount of losses which can be brought forward. The full details on group relief can be found in sections 23M to 23X of the current bill, which we expect will become legislation. A number of credits have been introduced to stimulate economic activity and investment. Some of these credits include the jobs credit, which is based on the number of employees of eligible companies, and the research and development credit based on certain qualifying activities. Eligibility of companies to utilize the credits are spelled out in the Act, but what is common for both credits is that the companies must be up to date with the filing and payments of statutory deductions and taxes prior to the first application of the credits. 8. The final major change that will be introduced by these amendments is the change in the prepayment of taxes. From January 1, 2025, companies that are not in scope for the corporation top-up tax are required to make a prepayment equal to 1/12 of the estimated tax payable for an income year. The prepayment is required to be paid by the 15th day of the following month. The Act states that the prepayment would be based on the taxable income in the preceding year. For the avoidance of doubt, let us provide an example. If in the income year 2024, the taxable income that was realized was $10,000, using the new rate of 9% corporation tax would be $900. The taxpayer would be required to remit $75 by the 15th of each month commencing February 15th, 2025. This particular provision has caused much discussion and questions for the Barbados Revenue Authority. We are looking forward to the dissemination of a set of frequently asked questions that we believe would assist taxpayers in applying the new tax provisions accurately. These FAQs should also include how to treat to the year of transition, when a company could be subject to 2 different tax rates based on their fiscal year end. ICAB remains committed to assisting the public in understanding our changing tax landscape. And as previously mentioned, we will delve into the other tax bill, the Corporation Top-Up Tax Act 2024, next week. I am Jason King, and this is Talking Business with ICAB.